Good morning. This is TJ with the P2 Trend Jumper, netpicks.com. Getting ready to start our Friday session. Going to do some live trading today. Crude oil beginning in about 5 minutes. And it's nice to see crude oil pulling away from the $100 a barrel level, close to the lows of the day today. Alright, we got a short at 63. I'm definitely adjusting. Boy, the low's 59. That's a 5-tick adjustment. Right at the low of the day. I never make 5-tick adjustments, but right at the low of the day, I feel like I don't have any choice. It really messes up my risk-reward ratio a lot. But I don't want to get short right on top of the low of the day either, so I'll go to the third target, kind of taking some liberties. And fourth time's a charm. If it does push lower, we'll see if it breaks through. But it's showing signs like it may want to pull back up towards the yellow line. And the pit's about to open in a few minutes. Maybe it'll just cancel itself. Let's see, unadjusted, it would have hit the entry. See how it hit the entry at 63? And clearly this requires some sort of adjustment. So if it comes up and touches the stop, then I'll just consider this trade over. And I will have avoided a bad trade. But if it comes down and crashes through the bottom without able to get any higher, I'll be in it. Maybe pick up something on the trailer if it falls hard. Well, moment of truth here in a few seconds when the pit opens. This will be interesting. That quarter century level holding on the top side right at 75. Got numerous attempts to get below 60. It did poke through. Look at that. See, it's still held at 75. Pit opening.
Order
And
filled.
there it goes. It didn't cancel. And now with that big adjustment, I could be in trouble. That's the problem with adjustments. They could still trigger in and then trigger out. Heating oil also with a short setup. I'm doing heating oil on a different platform here. I got my entry way down here at 9147. That's where the setup is. It hasn't canceled yet. This one right here. Interesting to see if it comes down and makes new lows. So heating oil did trigger in. So heating oil short. Looking for crude to continue lower. And there it is. I mean, it's hitting money management. This has got to go down to 62 now. I can't cut risk all the way. Wow, hitting full target on heating oil really fast. And now I've got to move my stop on heating oil, which is way up here. Where is it?
Order filled.
And hitting target on crude oil as well. And I got to lock in now. I made my full target. Don't want to take a loss on crude. That could mess me up. The unadjusted entry is at 61. Actually, you know what? I'll risk a few ticks on this because I'm profitable. Try to stay in the trade. That's where the stop should be. I don't want to get stopped out prematurely. Meanwhile, heating oil is kicking butt. It's really fallen like a rock. You can see on over here. And I got to move that stop on heating oil as well. That stop going to 41. Trading too fast markets, not an easy thing to do. Okay, it's at 41, so we'll just leave it where it is. Don't want to take a loss on crude. I mean, it's only a few ticks. It's still a profitable trade. I have to make up for the adjustment I made. And I want to hide the stop now above resistance, right? Support becomes resistance. So I'm up here, right above the jump line. See if I could survive a bigger move down. The stop on heating oil is going to move to 2.6. I'm going to do that now. I can anticipate that because it's a momentum bar. Love to see this crash lower. Try to get to 95 a barrel. That would be nice. You'd expect it to stall out there. It's a pretty big key level. Heating oil, you had to utilize the newer approach to our crossover trade, where we changed the rules a little bit in regards to canceling setups, and it worked perfectly with this trade. It's the reason why I changed the rule. Love to see heating oil make a new low. Okay, the stop is going to move to 16 on heating oil. Let's do that now. Hopefully it doesn't come flying up. Yeah, heating oil just stopped out. Move that stop a little quick. But still
Order
a
filled.
nice trade, and crude oil stopped out too. So, trying to avoid the low of the day, and it still crashed through, hit a full target. And you can see the 5-tick adjustment. I never like to make adjustments that big. Usually it's 1 or 2 ticks, sometimes 3, rarely 4. Well, this is even more rarely 5. And, in the end it hurt me because unadjusted was perfect, worked perfectly. And I gave up 5 extra ticks, not only on one position, but I gave up a few extra ticks on the second position as well. So it's just a mild winner. I don't think I would have done it any differently. Looking at heating oil, you can see the entry was here, came crashing down here, and I tried to anticipate my stop moving based on this bar, and this bar ended up closing right on the jump line. So in a sense, I moved my stop too soon, and that happens when you're trying to anticipate using momentum bars. It's hard to be 100% perfect. However, I did make a little extra money because it would have stopped out anyway up here at 26. Instead, I got out at 16. I made an extra 10 ticks on it, so I'm not disappointed. So with the trend jumper, it used to be the original rules were on a crossover trade, if the bar closes above the jump line, it would cancel the trade. But now we don't worry about where the bar closes. We only want to know where the confirmation line closes. And when it closes above the jump line, that would cancel the trade. But as long as it doesn't, we keep the trade going. Because a lot of times the trade needs more time to develop. You see, and that's what happened here. It came down, it came up. You can see this nice consolidation pattern. And if you look at the chart, you could see that the chances of another leg down were forming, because you've got this big fall down, and then this weak consolidation that continues to fall, a weak consolidation trying to get back up to the 50 EMA, and then you could see the consolidation, right? And then it breaks below, and you have a setup here. It still wanted to pull back up again, and look at how it reaches that line. We see this so many times. Just traditional technical analysis, and support becomes resistance. It comes through, comes up and tests that line. Great place to short. We had our setup down here, which is fine to stay with the setup, and it crashed through. Confirmation line staying below the jump line the whole time. I was excited to get into that trade. That trade had winner written all over it, and it won. One and done in heating oil today. And crude oil with one winner and looking for another one. Notice I used 2 different broker platforms to trade 2 different markets. It makes it a lot easier with multiple monitors too. I had my heating oil ladder stretched up across 2 monitors because the ticks are so small and it moves so fast. You need to have a long monitor to be able to find your handles fast enough, which I did. But also because then I don't have to flip around from one to the next. I could go from the TradeStation matrix with crude oil right over to the Thinkorswim ladder for heating oil, and it's faster. There's just less of a delay, less of a the time you have to wait for the computer to react. I mean, I have a powerful computer, but it's still, TradeStation being only a 32-bit piece of software, it takes time. You could lose a few seconds flipping back and forth. But when you have 2 platforms, you solve that problem because you don't lose any time clicking from one to the other. I notice with Thinkorswim I never lose any time, but with TradeStation I do sometimes. So I like to focus on one market with TradeStation. If I want to do another market simultaneously, I'll use a different platform. I just find it much easier to manage. Okay, crude could be trying to get into another trade here. We'll wait and see. So heating oil gained 59 ticks with the stop being where it should have been. I got 69 ticks because I moved my stop trying to anticipate where it was going to move to, and so just got lucky. A minor mistake actually helped me. I'm trying to think quick on my feet. You have to learn how to anticipate what's going on with the range bars. Could be setting up a short trade. Crude looking like it's starting to peter out here after that move lower. You could see that it came down pretty hard. It tried to get lower. It's stalling out. Now it's consolidating again. It's moved lower with a lot less energy. Could be getting near the end of this move here before some sort of attempt to get higher. But you never know. I mean, we do have a short trade setting up. This bar is going to be a short setup, and it is the next trade in the strategy. And there it is, and we'll make a one tick adjustment. Low of the day 42, and it's targeting 29, and we'll see. Maybe it will break through, maybe it won't. Stops at 5.6. Give that a chance to work out. Crude oil, I only made 10 ticks. Bear in mind it would have been 16 ticks if I didn't make an adjustment. Actually, I did compensate a little bit by going to the third target. So actually would not have, that trade still would have been a small trade. It would have ended up being 14 ticks. That would have been 14 ticks. So I gave it 4 ticks after all that adjusting when it all nets out the way I traded it today, and I don't think I did it incorrectly. I would do it the same way again. There's always an exception to the rule, and that was a pretty obvious one. And notice how the target that I chose, I moved it from the second target to the third target. Not something I typically do. It's definitely not part of the trade plan. But I had to, because when I made the 5 tick adjustment, my risk reward ratio got messed up. I had to try to get to, I had to make it up on the target side. Because look at, this is where the entry should have been, way up here, right? And if I got out at the middle target, I mean, that wouldn't even be worth taking that trade. There just wasn't enough in it. 9 ticks. I had all that risk all the way up to here. You see, not worth it. So I mitigated. And look at how look at how it came down to that exact level. I mean, it didn't go any further. I mean, that was it. Had my target in the exact perfect place. That was lucky too, but it's nice to see when that works so well. But you do have the option of trying to push your target down when your risk reward is a little bit out of whack. It's not something that we've talked about a lot. You just got to think on the fly sometimes. There's a 5% art to trading, and I exercise the artist in me with that last trade. So let's see now if I can get my quitting goals, 2 winners, positive result. It's feeling like it wants to go lower. I mean, the buyers just can't seem to push
Order
that price
filled.
up. There it goes. Hopefully we've got enough to follow through. If I can get to the first target, at least I guarantee my goals for the day, as much as I would prefer it to hit the full target. 9542 is a 1 tick adjustment.
Order filled.
And stopping out. So it is having a hard time getting lower. Yeah, at 1, 2, 3, 4, 5. The 6th setup to the downside, you have to figure that the odds are going lower and lower with each new short. But you never know. It did crack through, make a new low of the day, barely. You expect some consolidation. Still got work to do this morning. Alright, trying to break through again. Looks like my stop was just a little bit too close. But that's the formula we use. Nothing's going to be perfect. Let's try again. 9533. Targeting 9525. Very small trade.
Order filled.
Stops at 41. And this is a tight trade. Would have preferred getting short after this red bar here, but that's just not where the setup occurred. Pretty choppy, no real follow through, a lot of backfilling today. Keeps breaking the new lows and then turning on a dime and heading back up. Hopefully we'll survive and it crashes lower here. And my target right on the quarter century number of 25. And a real small trade. I mean, this one target's not going to be enough to get me positive. Okay, missing the target by one tick, but it's such a tight trade, I just can't move my stop. It's only been 7 ticks from the entry. This is what you call a scalp trade. Trying to hold out for a full winner and hopefully pick up extra on the trailer. 8 ticks is the smallest trade I will accept. If it was smaller than that, I would just ignore the targets and then lock in a tick once it goes 10 ticks and then trail the jump line. Try to pick up a bigger move with 2 positions. That's not what happened here. Pretty stingy there. Usually the hard level is the quarter century. This is 1 tick above it. The accurate target, this time 1 tick too far away. A little 1 tick margin of error there. It got down to 26 instead of 25. But you can see how the trend jumper works. Sometimes you miss. You miss by a hair. It's pretty close up here on the stop too. I mean, the stop was pretty darn accurate as well. It was just a tick off, basically. 2 ticks off. Try to be as precise as we can, and it is what it is. In the end, the way it all shakes down is just another trade. Trade plan continues to post huge gains. It's done nothing but make new record equity highs all month long in October. So I'm not going to worry about this trade or that trade. It just, the trade plan itself has got a long-term winning track record. So missing a trade here and there by a tick or 2, it's just going to happen. There's no way to avoid it. If you try to avoid it, then whatever rules you change, you're still going to end up in a situation where it's going to miss by a tick or 2. It's just inevitable. That's a good sign. If we were doing add-on trades, although it is a little bit deep, I mean, that's what, the 8th short in a row or something
Order
like that.
filled.
Well, there's the full target. And there's my 10 ticks. I'm going to lock in now 1 tick and hope that I can get lower. I want to make up the loss from that prior trade on this trade, but it may not happen. Just got the feeling the price wants to come down and test the $95 level, big round number, and hopefully it'll do it smoothly instead of this herky-jerky backfill. You know, it's fighting every way down. It's nice when you get a sell-off where it just falls like a brick, but that's just not what's been happening. This has just been kind of 2 steps forward, 1 step back, and they're small steps. Heating oil with some nice trades. The next trade was a 1 tick winner, and then the next trade after that, see this trade here? Well, there was a long trade actually, but that trade is against the EMA filter, so that's not a trade we'd be taking anyway because of the rules of the trade plan. It would be this trade, and it got 1 tick, and then it broke through and got another full winner. So heating oil definitely falling and easy trading market today. I want to see this white trade, which we're not in, but we're kind of in it because we're still in the blue trade, right? So it'd be nice if we can get that lower and come down and get those targets, and hopefully that'll give me a chance to get my stop down. I'm 10 ticks shy on the session so far, 10 cents to break even. So anything over 10 cents puts me in a positive position and hits my goals, the power of quitting goals. Sure would be nice to get it done on this trade, but it may not happen. I mean, could I cheat when it stabs back down and gets down to this level? I could get out of the way and make a tick or two or break even or whatever, but that's not what I'm trading for. I'm trading to get the edge that the trade plan gives me over time and just operate it like a business. And this is the next transaction I'm in, and it's just a matter of staying with the rules and executing the trade plan and not worrying about the outcome of this trade or even this session. And what gives me the confidence just to stay with the trade plan is the big picture perspective, which is this equity curve. These are all the trades of the trade plan. And here we are up here at all new record profit levels, and we're right near the top. So whatever happens today, win or lose, I mean, that's where it is. It's going to keep going higher as long as I keep doing the trade plan. It doesn't have to be today. It could be Monday. It could be Tuesday. It could be next week. It could be later today. This trade under some pressure, trying to survive.
Order filled.
And it did stop out, unfortunately. And I can get in sync with this white trade if it comes back down. I'm a little concerned, and that's the 8th trade in a row to the short side. 8th or 9th. 1, 2, 3, 4, 5, 6, 7, 8. And even though I am still, now I'm 9 ticks shy, I have to keep in mind that unadjusted, I would really only be 5 ticks shy, because the system, without adjusting, made an extra 4 ticks up here. So the strategy really is only 5 ticks shy of break even. And anything over 5 ticks, you'd have to consider quitting goals, because you have to kind of penalize yourself for the adjustments. So do I want to get in? I think I'd get in. I mean, I'd have to make new lows again. That's a 3-tick adjustment, 21. Those adjustments really hurt you. And it's the 8th short in a row. You can see I'm hesitant to put that order in. Had a pretty positive week so far in crude oil. Modest, actually a modest week. It was definitely a winning week, but so far I've got 40 cents only on the week. And I want to go into the weekend positive. I like quitting with a 40-cent result this week. I mean, last week was $1.92. It's just this week was a little harder than last week. Actually, for crude oil, it wasn't. It was rather quick. Not a lot of trades. But the results were just modest. I mean, 2 weeks ago it was $2.05. That's over $2,000. This week, 40 cents at this point. And I'm still not positive on the session. 3-tick adjustment. If I went for this trade, I'd probably go for the bigger one, even though it's just not following through. I'm just waiting to see if there's going to be some capitulation. This may just end up mitigating itself. So this trade here canceled anyway. This trade's still live. And if I do take that trade, I'd have to make a 3-tick adjustment, which it could just touch and then still turn around the other way. Yeah, I don't think I have any choice. Don't have any choice. 9538. So I mean, I wasn't in this white trade because I was in the blue trade. Now I'm thinking, well, it's still valid. It hasn't stopped out. It hasn't hit its money management level. So if it comes down, I could get in sync and grab that trade. But now it's 2 ticks below the low of the day, which who knows, that could hold. And if it does, I don't want to get triggered in and then stopped out. I'd rather give up another 3 ticks on the entry. It's an insurance policy. It may or may not work, but I think that's the way to go. Especially with 8 shorts in a row. 9 now, although it canceled. So maybe I'll just avoid it if the price heads higher. Because if the price comes up and touches that stop, then I just assume that trade's over. We don't take every trade that prints. You have to know which trade to take and which one not to. Because we were in the blue trade, I'm not interested in the white trade. But now the blue trade's over, the white trade's still valid. Because it hasn't canceled, it hasn't stopped out. So now I do have to think about taking it if it comes down. I'm just trying to stay within the trend jumper trade plan without overthinking stuff and making little chart level adjustments when I see key levels. The low of the day, it's a pretty important level. Even though it keeps changing and going lower and lower, it's doing so with less and less follow through. Hasn't really made any significant effort to come up and touch that yellow EMA. Eventually it's going to, but I still think that that $95 a barrel level has some magnetism to the price. I do think it's going to try to get down to it at some point. See, the 3-tick adjustment really messes up the risk-reward ratio again on this trade, so I just consider it an additional cost. It's an insurance policy. It does cost. But if it could come down and hit the target, I'll be at my quitting goal, and then I will lock in a tick and make sure there's no way to give any of that back. Soybeans getting long today. Getting long right now. Trying to get positive on crude. I haven't been paying attention to soybeans. And there it is. That entry at 12.65 and a quarter. See if it comes back and lets me get in on that one. You see how it came down and touched the entry again? If I didn't make the adjustment, I'd be filled. And that may be a good thing. If it crashes through, it will be a good thing. Then the cost of my insurance costs, right? So far, the cost of my insurance hasn't cost me anything, and it may save me. But if it crashes through and hits my entry, well, then I just paid $30 of insurance premium per position.
Order filled.
That was soybeans. Soybeans coming down and touching my entry, so I was able to pick up on that trade. Heating crude seems like it wants to go down. Real dogfight here at this low of the day. Hitting the entry, the unadjusted entry yet again. My insurance policy keeping me out at this point. Testing the low of the day.
Order filled.
And hitting me. See, so the insurance policy didn't really save me any money, and we saw that earlier. The entry was the best place to get short. We saw that on this trade too, right? But, I mean, all you can do is try to think it through and do the best that you can. Those insurance policies don't always work. If I hit a full winner here, it's still going to be a good outcome. Now it's bouncing off the 20-cent level. I need to pick up another 10 cents here to get to that target. Just the lack of follow-through is what's got me concerned, but hopefully we'll get a move like we saw here. These targets are usually fairly accurate, as you have seen many times, so hopefully we hit this 10-cent level on this trade. And I did hit money management on soybeans. I got to push the stop up and lock in a tick. I'll take the risk off the trade on that one. See it sitting on the money management. It may come down and take me out, but just got to manage the trade the way the plan is and try to hang in there. It is one tick below that EMA. And
order filled.
Yeah, soybean just got touched out for one tick. So we'll have to wait for a new trade on that one. You throw the hook in the water, you try to catch a fish. Sometimes you get away. Sometimes you got to throw it back in. But you want to get in as many risk-free positions as possible. Anytime I'm in a risk-free position, I consider the trade successful. I had one tick locked in to cover the costs. Crude oil could be trying to find a bottom here. I mean, it's fighting its way tick by tick, lower, 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 but it's a real dogfight. Now that it's come back and tested the jump line, hopefully that holds and it pushes for another leg down. Got this move from here to here, coming up, finding the jump line, hopefully finding resistance to set up another leg lower. That's the ideal situation. Doesn't always work so smoothly or so easily. All right, look at that. It came down and hit money management, and I have to move my stop around the entry. That would be 23. Boy, I could end up stopping out here. I got to stay with the trade plan, locking in the one tick from the unadjusted entry, and hopefully, look at that. It missed the full target by just 2 ticks. Don't want to take a 2-tick loss on this trade, but the trade plan says lock in a tick. I mean, I really need to. I could try to take a little profit because it missed the target by 2 ticks, but there's just not enough breathing room, right? All right, here we go. Now we missed again. Come on, push through, push through. Come on. See a news release coming out. ISM Manufacturing. Is it going to help this trade? If this was a bigger trade, I would have locked in a little profit. I really would have. At least with one of my positions. It's just not worth it. I'm just going to try to hang in there. I'm going to make this my last trade today regardless. I'll go into the weekend with a positive outcome for the week. I don't want to risk. It's a marginal positive outcome regardless. So I'm willing to have a few ticks of risk here to try to pick up a winner. The whole idea is to try to stay in the trade while mitigating risk, right? You don't want to get out of the trade prematurely. You don't want to be afraid of the outcome. But you also want to manage it according to the plan as best you can. And this has a chance to push through. It does. It could stop out too. You just don't know which way it's going to go. It'd be nice if we got a big, strong spike down. But we did. It just didn't go low enough. Missing by 2 ticks. So the price wants to be stubborn. Well, I want to be stubborn too. And we'll see who ends up winning in this battle here. Missing by
Order
1. There's the
filled.
full target. You see? Patience pays. Now I could push in and lock in 1 tick. I've got power of quitting, guys. It may only be a few ticks, but I'm positive, and I'm also in a position that I could get a bigger move down. It may not happen, but all you can ask for is the opportunity, right? And I have the opportunity with 0 risk. That's the name of the game. 0 risk. So whatever happens here is just adding to my positive outcome. I could scalp out with 14 cents, but no. I'm just going to let the trade plan do its thing. I don't need to be too inventive. If this closes lower, I will be able to move my stop down a couple ticks to 16. Let's see where this closes. And I'd be much more positive if I didn't pay my insurance premiums, right? If I didn't adjust around those 2 lows of the day, but I just don't see how you can do that. Sometimes it does save you. I think that was money well spent. I ended up positive anyway. And notice I'm just following the strategy. Now I can go to 16. So you see, I got 5 cents guaranteed now with the chance of going lower. And now I can go down to 13. And again, look at, there's the $95 level. Told you it was going to get down there. Look, it's missed by 2 cents. 2 cents above 95. Imagine if it crashes down below 95. Maybe that sets up a bigger move. But I would expect 95, it's going to find some support here at the key level. At the key level, you have to expect that it's going to take a little effort to push through it if it does. And right now you can see that at play, right? Yeah, I may not survive it, but I've got 8 cents on my trailer. I'm positive on
Order
the day,
filled.
and the trade is done. I had a chance to maybe go lower. It didn't occur, but I gave myself the chance, and it was risk-free. Look, my trade was way up here, right? And my stop took me down to there. So that's a wrap, guys. We did it. We got to power of quitting. Power of quitting is this whole dynamic goal setting strategy. It allows you to take what the market wants to give you while quitting positive on most sessions. And like this, it gets us our winners and gets us out. And some days we'll win more than other days. But again, it's dynamic. It adjusts to market conditions. Taking what the market wants to give us is a hard concept for some people to accept, because most people like to remain in control, right? But you don't have control over the market. So I like the, just almost being like a river rafting guide, right? Going with the current, going with the flow. With power of quitting, it empowers you to quit trading positive on most sessions, and like this, we're able to steadily grow our account and minimize our risk exposure to the market at the same time. And that's a pretty important component to long-term success. And the results play themselves out. I mean, the results show it. because I just showed you that equity curve, and I just popped in the trades into my spreadsheet, and I'm going to go ahead and adjust that curve again to account for the new trades. And remember when I said we were up 40 cents on the week? Well, I just put the trades in. Here are today's trades with the adjustments and everything. That's why this stop on the trailer lost 3 ticks, because I was adjusting around I was moving the stop around the unadjusted entry. Okay, so there's the 10 ticks I made today. Not a lot after expenses. Maybe I could buy a tuna fish sandwich, but it doesn't matter. It's just one session, and it's 59 cents instead of 40 cents, and you could see that it just barely poked up. It's just too small to see, but no, it's probably right there, right on the ledge. One more trade is a new equity high. We'll have to wait for Monday for that one. But you see, it's the longer term picture and the edge that we get over time with the trade plan that pushes the equity higher. It's not worrying about the outcome of any trade. You just manage the trade according to the plan, be the facilitator of your trade plan, and let the trade plan do its magic. The trend jumper is for real. It continues to work. Those are the kind of equity curves we are seeing on all kinds of different markets, Forex, futures, and stocks. Thanks for joining me, everybody. This is TJ with the P2 Trend Jumper and netpicks.com. Hope you enjoyed today's session. We'll see you next time.